Hey guys, welcome back. Let's be honest, when it comes to money stuff, it can feel like you're either supposed to know everything already or just stay confused forever. Today we're breaking it down properly. What's the difference between trading and investing, and more importantly, which one suits you best right here in South Africa? So let's jump in. So first up, we've got trading. What is trading? Trading is about short-term moves. You're buying something today because you think the price will go up soon, maybe in a few minutes, maybe a few hours, or even a few days. It's fast, it's exciting, it's a little crazy sometimes. Here's an example. So maybe you buy Sasol shares at 103 Rand, and in a few days later, they go up to 110 Rand. That's a quick profit, lekker feeling, but trading needs you to stay sharp. You got to watch the markets, follow the news, and sometimes things can happen quicker than a packet of Maggi 2-minute noodles. So you need to stay sharp, watch the news, follow geopolitics, and let's get on with it. So there are different ways people trade. First up, we've got day traders. These are people who buy and sell within the same day. No overnight stress. For an example, you see Goldfields. Goldfields is it's a mining company in South Africa on the JSE. So you see Goldfields, they jump because of a gold price spike. Like for instance, 2 weeks ago, there was a gold rush because of the Trump tariffs. So the price spiked so high that you bought in the morning when it was at 270 Rand, and by the afternoon, because of Trump's announcements and the tariffs that hit the market, everybody was investing in gold, and by the afternoon, it all of a sudden went up to 280 Rand. You sell that the moment it reaches 280 Rand and you take your profit. You're in and out before the markets even close. Second up, we've got swing traders. They are the ones that hold a little longer, from a few days to a few weeks. Here's an example. You notice that ShopRite is in a strong uptrend. You buy now at 250 Rand, and after 2 weeks, it climbed up to 270 Rand. Notice 250. What's the difference between 250 and 270 Rand? That's a 20 Rand difference. So you sell and cash out at 270 Rand. You're riding the wave, but you're not stressing minute by minute. Third up, we've got scalpers. These guys are all about tiny, fast profits, making lots of little moves in the market. For example, let's say the Rand versus a dollar is moving fast. You jump into Forex for a few minutes. Forex is like you trading currency. So you jump into it for just a couple of minutes. You buy at 18 Rand 50 and you sell at 18 Rand 52 cents. Tiny move, tiny profit. You do that 20 to 30 times a day. Think of scalping like chasing 5-cent coins. It adds up at the end of the day. It's fun, but it's also risky. If you don't manage your risk properly, you can lose real money, like basically all your money. Okay, so now that we've unpacked trading, let's talk about investing. Investing it's all about long term. So you're not stressing about daily ups and downs. You're thinking about years from now. It's about buying good assets, shares, ETFs, which we unpacked in our previous videos. ETF stands for exchange traded funds, property, and giving them time to grow. For an example, imagine you bought Naspers. Naspers is a tech company on the JSE. Imagine you bought it in 2015 or maybe like 2010, and the price is around about 1,600 Rand. Today, they're worth way more without you needing to check your phone every 5 minutes. It's basically like planting a fruit tree. You water it, you give it sun, eventually, boom, juicy returns. And by the way, so Naspers is trading, if I'm not mistaken, as of last week, Friday, it was trading about 4,200 or 4,400 Rand. So just think about it. You've invested 1,600 Rand in 2015 or in 2010. You might double whatever you've put into the market. You get different investing styles. First up, we've got growth investors. You're hunting for companies that will grow big over time, like a Capitec or a ShopRite. So if you've invested in Capitec 2 decades ago, you would have been in a very good position at this moment, because Capitec's share price was very cheap when the business started, or when the company was launched, and ShopRite. So it goes with any other giant company out there on the JSE. So then you get dividend hunters. You're looking for companies that pay you cash while you wait, like a Standard Bank, MTN, or even a Woolies. Most of these companies pays out dividends biannually if the company does good. Then you get value investors. You're buying when companies are cheap, like picking up a bargain during a Woolly sale. Then, last but not least, you get ETF investors. The ETF, exchange traded funds. We've unpacked ETFs in one of our previous videos. You invest in a fund like Satrix Top 40 and let the whole market grow your money over time. So let me unpack Satrix Top 40. Those are the biggest market cap stocks or companies on the Johannesburg Stock Exchange. So they get put in a bundle or basket, and if you put money into it, your money gets spread throughout 40 of our top companies in South Africa. Okay, so now that we've unpacked trading versus investing, which one are you? If you like quick moves, adrenaline, and checking prices all day, like me, trading could be your thing. If you're more patient, willing to let time do the work, and you like sleeping peacefully at night, investing might suit you better. And honestly, you can do both if you want. I do both on a daily basis, monthly basis, weekly basis, not annually as yet, almost there. You can have a part of your money you trade actively, and another part you just invest and leave for your future. Okay, peace out, guys. Up until next time.